Hi, everybody. Trendy John here. Let's go ahead and get started with last week's alerts. Uh, this past week, I had quite a few alerts. A lot of them are because of broken debit spreads and stuff like that. Remember, during earnings season, I'm going to be putting on debit spreads, and it can get a tad bit confusing, depending on if you don't understand my strategy or not. If you guys have any questions whether or not the trade was profitable or not, please reach out. I'll be happy to tell you. Let's get started. So RIVN, this was an equity trade. This was leftover from the previous week. I went ahead and sold. Remember, on the equity trades, all it's telling you is how much I gained from that trade. So if I got in at $1, and usually I'm not trading, or not usually, I'm not trading penny stocks, if you will. But let's say I got in at $1 and it went to $1.10, I made 10 cents. Okay. Moving on down, it looks like I added some Google. This is equity. This is a long-term position for me, by the way. So again, long-term position, not much to report on that, just adding at levels. This is a options trade that's not been doing great, and I have added into it a couple times. This has, you guys can see here, it does not expire until February 16th. So this is a add into an existing position. And then here on equity, I add as well in Google. And then I got into some GBTC. I was looking for the Bitcoin to move. And you can see right here that I closed it out after 75-cent gain, got in at 37.54, got out at 38.30. IRBT, this is a very long term for me. You guys can see the date here. This is a leap, January 17th, 2025. I had the 20 call. I added at 3.2. Google trim, on some of those that I added, it popped a little bit, made 58 cents. And then here on Ulta, I'm getting into a long, let me see, February 2nd. This was a short term butterfly, it looks like, for $1.95. Google, I'm trimming again for 59 cents. Roku, this is a buy equity at 91.71. Google trim, I trim again for $1 gain from our entry. Path, this was a long-term trade that I had on that was kind of being slow. And I ended up closing it for a 36 cents gain from the original entry. Roku, I got stopped on this position at 21 cents, meaning a gain of 21 cents. SMCI, this was the one trade this week that was really powerful that I wish I would have like really dumped at least, you know, 2% into, and I made it just too small. So another note to myself to try to stay consistent with my allocations. Got in at $1 on this particular spread. This was for this week, sorry, last week, and it was 545 by 550. They were for $1. Nike, I was in this position. This was a little bit more deeper in the money, if you will. We made 15% on that first trim. We sold out at $7.50. Tesla had bought the dip in the previous week, and I sold for a $6 gain from entry. And this is before I put on my big position. I wish this was, I wish the week before was the time that I put the big position on, but it wasn't. Ulta, the reason why I closed the butterfly is because it was showing a lot of strength. And then I realized that I had the long-term debit spreads on for Ulta on the put and call side, which are about 40 days out right now. And it looked really strong, so I did not want to hold this. I did, so I sold at $2.60 or 33%. Now, what's interesting, let's go ahead and just kind of go over here real quick and see, like, where did Ulta actually end this week? Did it actually, close between that? I have no idea. Let's take a quick look. So it was at 505.33, and we were at the 505. So this one would have lost value, I think, because yeah, obviously it was just over the 505 level. But interesting, we did kind of pin that perfectly, if you will. Moving on down here, DE, I was in this position as well. This was it looks like a debit spread. I closed for 38 cents. And let's go ahead and see if I closed way too early. It is definitely possible. Um, I took the money off there, though. I think on that pop, if I recall, I really wanted to make sure that I was taking a lot of my positions off. But let's go over here. So my debit spread was 410 by 420, and we still have a long time on that. But again, I closed it for 38%, but you can see it looks like it was the right thing to do here as of right now. Okay. All right, let's go ahead and continue to move down. SPX, this is a 49.80 by 5,000 call. This was actually about a 60% gain. And the reason why it's not showing 60%, just to kind of refresh you, is that anything over 10 days, my bot that reads the API behind Thinkorswim only keeps the 10-day. So anytime I close something that we've been holding over 10 days, let's just say that you had liked the idea and you were in the same sort of trade and you were like, hey, John, what was the actual percent gain on that? Just ask me. We can always go back and take a look. So this was, I want to say this about a 65% gain on this long-term trade that we put on. So that's another bonus trade that we had. PayPal, I had jumped into 60 calls. I sold those, it looks like, at 13.20. These did not expire until 2025. Now, again, this is reminding me that on the pop, I felt like I was getting the opportunity to sell things. Once again, let's come over here just for fun and kind of see, was this mismanaged? Should have I been patient? The market was really bullish, so I'm really curious to see what these are looking like right now. And I haven't done this. This is all, right now on the spot. So January 17th, and I still really like PayPal. All right. And we had the 60 calls, and those are currently, let's go ahead and detach this real quick. So I had sold at 13.20, and right here, this is the call. This is, sorry, that is not the right date. Sorry about that. There we go, right here. And here it is right here. So 60 call, and here's the price. So we sold at 13.20. So as of right now, that looks like a great sale. It's way early on a leap, but again, I I came into the market kind of feeling like, hey, if this was the week, it was going to pull back this week. So I felt like early in the week on the 29th, this was a great opportunity to sell some of the positions that I had that were up. IWM trim. So I had only three contracts because if you remember, I'd only started with three here, and I personally was looking for a lot larger move, and they ended up being pretty weak this week. So I sold two of the three, which left me one. Okay, but we sold at 23%, and let's just come over here to IWM really quick and see what those look like. And I know I added these. You could see I added these right at the end. So I bought some at the end as well. So if we come back in here, 17 January, and these are really out of the money. Okay. Let's see what the price was. There we go. So 212 by 223, and the trim was 271. So we did good on the trim, and I looked at it as Friday as an opportunity to get back in. Now, please understand when I say get back in, this position is really small right now. I want this position to be somewhere around 2 to 5% of my net liquidity. All right. So this is in the infant stages. Like this is a baby. All right. So please understand that. I don't care if it goes down. If it goes down, I have an opportunity to buy more. So please know this is a beginning type of trade. The reason I took it off is because Monday had felt really bullish and it felt like it was an opportunity to buy things cheaper later on. Here was the remainder of that Nike position. And once again, we sold at $7.50. This was March 15th, 97 and a half calls. Let's see how we did on that. March 15th. There we go. 97 and a half. These are going for 525 and 530, and we sold at 750. So great call there to get out of that trade as well. All right, so SPX, very important. Notice the price on these, okay? Every time I trade something this inexpensive, especially for a spread, it is considered a zero trade. What I'm looking for in a lot of these trades is to be able to pay very small amounts and make anywhere from, it will trim at 100%, and then we're looking for 300%, 500%, and so forth. All right. So these are very inexpensive trades that can lead us to a very nice profitable trade. Moving on down, FDX, you can see I added again into the position. And right now, guys, I have 8 calls, which is still a small position. I knew from the get-go I wanted $1,000 in FDX, and that was my overall allocation that I was willing to lose in this trade, and I've added into that trade. Okay. META, what a, this is a reminder right here of just this is where things later on kind of festered in, got underneath my skin, if you will. I end up taking losses on these trades. And again, it's hindsight, right? And you realize that you can't predict the future. But I'm a huge fan of Meta's earnings. Like these guys do amazing. And you'll hear more about my story towards the end of these alerts. But this was frustrating. So I think I had bought close to 100 shares on this and end up taking a loss for it here shortly. And you'll see Google, I added into a position. Meta, I added some more. And then Meta, I trim. We get the pop that I'm looking for, right? So I'm getting excited. I'm like, okay, these guys are going to run into earnings. I'm going to be able to hold some, but I think the day starts going kind of sour later. Okay. So buy to open SPX 5 at 5.2. I take a quick loss on this. I remember this exact day. I had a level. I had a limit order in on the premium chart. It came down into the level. It went right through the level, and you can tell by the time that it only took 8 seconds to lose 9% of this position because I had a limit order and I had a stop and it immediately just flushed, and that's what happened on this trade. But great management far as like taking those stops. Nike, I buy some equity at 104.05. Nike, I add 1.04 at 0.06. So I was feeling pretty good about the trade and added twice. Meta, I added, so they start dipping. Nvidia, I buy some equity at 633, and this is the 30th. So let's take a look here. All right, so that's Tuesday, and I want to say this is where things start turning and not doing so well. Melissa buys Tesla at 375, and this trade did not do good for her either. And then this is where I start my big position. So she brought it up. I'm looking at it, and I'm thinking, yeah, I want to get into some shares here. So, and then I add, and this was this position right here, and you guys will get to see this on my Tesla week 1 review where I bought 500 shares and then I started thinking about it and I was like, I do not want to hold 500 shares of Tesla. Like this could ruin my year. You know what I mean? Anyways, you'll see that I end up taking a loss on this a little bit later, and I keep 250 shares, and I decide, you know what? In 2024, this is Ashley, my wife. It's our position. We'll start, and we'll add later if it drops some more. But as of right now, this is a long-term trade for me. All right, so moving on down, it looks like Mel adds at 305. And again, this trade does not end up doing well for her. Meta added for me. And I get up to, I said almost 100 shares earlier. I want to say my exact number was 80 shares. Over here, I get into RIG. And RIG so far has been, in my opinion, my worst trade. And the reason why I say that, after I go back and look at it, I have to ask myself, why am I buying anything that's under $5? Like this is a $5 stock, and I don't care if it's not considered a penny stock. And I've always said to myself, anything that's under $5, I really don't want to touch. Especially like the options, just they lost so much value so quickly. And from a percentage standpoint of how much rig had went down this last week, I totally get it and take full responsibility of my trade. But I bought 100 contracts, not at 24 cents. I think I bought 50 here and then I add another 50. But they just lost value so much. And they still have 2 weeks. So, and I will say that oil futures is coming close to some demand here. So there's a possibility, but I'm not a big fan. It's definitely on a list that I won't forget. Anyways, SMCI, I add into the trade. I feel like we're getting an opportunity, and I had sent out at Simpler my Monday video on SMCI, and I just wanted to follow it. So it starts coming down, and I think I quadrupled the size basically on this pullback. So Google, I go to buy, this is a earnings trade, and this did really well. So the 147 by 142 by 137, it was actually a perfect put position for Google on the earnings, which not a lot of people can do. So I was very, very happy with that strategy. It worked well. Now, this is the call side of Google. And basically, what we were looking at, is can we make enough money on this side to take care of both legs? So if you notice, this is 1.1 is the price, and this is zero point 0.8. So the total cost was $1.90. And my whole strategy going into earnings is, will one of these trades, if I hit it, take care of the overall price of $1.90? That's all I care about. I don't care if this works out or not. I have my strategy where I buy back the short side and so forth. It's just more profits if one of these sides takes care of both the cost of the trades together. Okay. Moving on down, I added tomato. It looks like I'm adding a lot, but again, it's just a little bit of shares here and there. And remember, we had trimmed out for profits as well. So it's kind of like re-adding, if you will. Microsoft, this looks like it's going to be an earnings trade as well. You can see here that I do the 400 put, 390, 380. And then over here, I do a 425 by 430. Now, the total cost was $1.55 and $1.20. Okay, so you're looking at 5, 7 plus your commissions, depending on how much it costs you to get in and out. Mine's pretty inexpensive, but on this particular trade, you'll see later that I sell the call side. So this was the one that I was talking about when we first started. Was this mismanaged? And you could say yes, it was, because my Microsoft trade over here was up, I want to say 65 or 68% that last time I had seen it. And it could have been more than that, but I had to get away from the office. I was on the go. So when I came back on Tuesday afternoon, I saw that my trade was up, and I was like, yes, it's working out perfect, because it was at 396, I believe. All right, 396, which it was nicely in the money because we had 400 by 390. And I was like, man, this is perfect, right? So what I did on this side, just to kind of show you, is I'm up 65 plus percent when I see it at the end of the day, like the day's closed out, right? So we're up 65%, which, you could do the math there. It looks like it's already getting ready to cover both sides of the trade. So I leave it on. All right. And of course, something comes out, and and then after the market, they're up another, $4 or $5. So I'm like, oh damn. So maybe I'll get it in the morning. No, that didn't happen. Microsoft keeps going up. But on a positive note, what happens is that I come over here, okay, and I buy back the short side and stay long the 425s, and those start to gain value through the week. Now I end up selling those towards the on Friday for like 55, 60 cents. So the way that I would look at this is, if I took another $100 or 120 minus that from the overall price that I just paid for this ended up being a losing trade. All right. But man, at the end of the day, it wasn't that bad. You know what I mean? So um, I still enjoyed taking that trade and teaching you guys. So I sold them for 62 cents. So I get $124 back from the trade, and I paid again 155, 120. Okay. So this is 175, but I sell two calls for 62 cents, this down here. So again, minus that from the overall, and that's how much money I lost. Again, not very much. So not bad trade, but it was bad management, I should say. It was bad management. I could have made money here, and I could have done well over here. Nvidia, I end up stopping out. This was a really small position. I lost $9 on the trade. The reason why it was small, all right, and for anybody that might be watching this outside of the room, the reason why it was small is because of the equity price. Like, I'm just not. That's a big number. And when I say small, I want to say that I took 20 shares or 15 or 25 or something like that. But anyways, you guys can see I lost there. All right, so Melissa's in a CVX trade. It does well. She makes 66%. The Nike equity that you saw earlier, I ended up taking a gain of only 10 pennies. I just wasn't feeling it. META, my equity, I ended up losing 49 cents. Google, I'm trimming, right, because it's not working well, so I'm taking some off. I lost $1.60, $1.80, and then I add, this is 7:16 a.m. I take this pre-market. So what had happened in this trade is that it looked perfect on the butterfly, and I wanted to start adding into a long-term trade. Okay, so the reason why I took these off is because the position was too big going into earnings, and I wasn't feeling comfortable with this particular trade. Okay, and I'm happy because we ended up coming down to the downside. Okay. And because we hit a level that I was predicting to the downside, I went ahead and added to the long term trade. Okay. QQQ, I have puts on. You guys can see here that I am lagging or I get out for a 125% gain at $3.42. Google, this is again 122%. So this is $1.78 that we take out of this trade. So let's go up here really quick to, if I say really quick, if I can't find it really quick, I'll just scroll back down. Here we go. Okay, so there's our Google trade. And remember, it was $1.90 to take on this trade. Okay, so if we come back here, okay, it was $1.90 for that trade, but our puts paid us $3.42. So this is exactly what I mean when I say, okay, that we are looking to try to hit one side of the debit spreads or butterflies when we go into earnings. We want one trade to pay for the other. So when I go back and I sell one of the debit sides, the short sides, I don't really care if it's profitable. All I care about is, did I pay for the entire trade and make some money? All right. And I do have a video that I made that I'll be sending out here to go more in depth about that, but you guys can see the results from that. Now on Google, um, sorry, over here, dollar, sorry, on this one, $1.78. All right. And then we showed you the total value. So that's what that is. And sorry, QQQ was 342. So $1.78 on this one. Okay. Google right here. This is where it can get confusing. And I want to bring this up because someone brought this up on Friday. This is where it can get confusing. But what I would encourage you to do is, if you're confused, do exactly what I just did. Okay. So we are going to scroll back up in simpler and look for the trade. Okay. So you're going to come up here and I want you to do this. All right. If you're concerned whether or not the strategy worked or not, I want you to look at the total price. So in this, the total price is $1.90. Okay, for Google. So for both sides, it costs $1.90. And then I want you to come down here. Okay. And I want you to see here, I took $1.78 from the market. So you take that $1.90 minus $1.78, and you would see that this trade, unless when I buy back the call side, I end up making money on these, it is not a profitable trade. All right. But to be able to put my money into the trade, into earnings, and use the strategy, am I okay with the overall loss here? 100%. All right. Because it's super small. All right. But this is how you do it. That's the quickest way. If you see an alert that comes through like this and they just had earnings, then you know that I'm buying back the short side, in this case, of the call. And what I'm looking for is that we made money on the put side, but the call side lost its premium. So now I want to see Google actually go up. Google never went up. So you end up losing money in this particular trade, but very, very small amount. Moving on. We start to trim SMCI. That ads that I had, it starts bouncing, right? It starts looking good. We take 16%, 44%. Rig, this is where I add another 50 contracts. And that position absolutely looks like poop. And I just want to bring that up so you can see it. Okay, because we don't want to just, you know, want to make sure that we cover everything on this. So look at this. These things are going for 3 to 4 pennies. You got 12 days left. It's an absolute, just a bad trade on my part. And this thing lost a lot more value than what I would have expected. And sometimes when I don't close the position, like a lot of traders, the reason why I'm not closing it is because the overall value of it, I would rather let it sit for a little bit and see if we can get just a little bit more out of it. Okay. And I'll show you that on the charts a little bit later, not in this video, but tomorrow. Okay. Let's keep on moving down. So SMCI, I trim again at 94.44. So this is a great trade, right? We're almost up 100% here. Its value is $1.75. Tesla, I am legging into puts. So this is my protection that I put on about the video. Actually, I just put the video out on my YouTube page and sent it in the alert so you guys could see it. All right, so there we are. This is my put position. I put 5 of these on. This is great protection for my position. I don't think that I'm aware of anybody jumping in 250 shares of Tesla here, but that's, I got 250 shares alongside and I have this little bit of protection on. And then SPX, I am buying a 49.25 by 49.35 for $1.50. It's a net debit, so I'm trying to get a debit out of that. All right, and Microsoft, you can see here, I ended up, what date is this? 131. Let me just take a look here. 31 was Wednesday. So Microsoft buy to close. This is the call side. So this was the short side. All right, and then remember, I keep the long side. Visa, it looks like Mel gets in 277 and a half, so 235. MPC, she's in at 395. CVX, she stopped out on her remainder position, which shows almost a break even, but the trade up above was a really nice first trim. So there's a big deviation between her trim and where she got stopped out. So that's something to always take note of as well. I'm not going to talk on Melissa's trade, but maybe she took her profits and then had her stop at like a break even or something like that. That's what it sounds like. SPX, it seems right here. I get in for a quick scalp using my premium charts. I get in at 8:30. I get out at 9:10. Moving on down, this is a trade we have on right now with Goldman Sachs. I paid $1.15 for a butterfly. All right, and Goldman Sachs closed up on Friday at 387. So we are inching closer to that. It just, XLF just looks so powerful. It is quite a bit out of the money, but again, just like the SPX, when I put on butterflies, they're usually really small. I'm looking for a really big return for a low amount of cost. Okay, so that type of trade right there. QQQ, I buy to open. This was an awesome display of how to trade my levels. We did this live, QQQ. I'm in on the puts. Okay, SMCI, I buy a another debit. So this time it's different strikes because this damn thing's so bullish. And again, should have went really big. Again, hindsight. QQQ, I am trimming those puts at 54%, 81%, 45%. And now, right when it hits my level to the downside, I'm starting to go long. So then I am, and this is all within like 20 minutes. And then I start going long, and then we're pulling out at 50%. SPX, I put on an iron condor. So if you don't know anything about that, this is the credit that I'm receiving, not the price that I paid. So I wish that my bot could say that this is the credit that I'm receiving. So if I'm right, I end up making $21. But this was a longer term trade, and you'll see it a little bit later. I only made like 8% in it because I wasn't filling it right before Amazon earnings and Meta. I was thinking, man, this market looks really bullish and I don't think we're going to expire there, which really I have not even looked at. Where did SPX expire? So we sold the 900s. Yeah, so I'm glad we didn't keep this. So this ended up working out well. I trim again on the call side at 108%. SMCI, I totally get out of the 545s by 550s. Don't get that confused with the last one we just added on at 122%. And then QQQ trim again on the calls for 116%. And then SPY. This is what I call let me make sure the dates are right. February 1st and February 2nd. So what I'm looking for is a bigger move, okay? So I'm bullish, so I go with a higher delta. Notice it costs more. And just to be protective, I go out of the money and I pay a low amount for a lower delta. Just remember that. That's on the 31st, and that should be, yep, that's at the end of the day. So 1506 and 1507. Moving on down here, the next day on the 1st, it looks like, oh, sorry, I buy some equity in Ulta. Again, high price, small position. V trim for her at 27%. And then we have SMCI. This is the bigger spread, the 590 by 600. It actually starts doing really well. We make 200% there. SPX, I buy a SPX at 620. She stopped out on the rest of hers. It looks like, again, she's making profit and it puts it at basically break even. And so good management there, Melissa. And then SMCI, we finally get out of this position at 266. And MPC, she is closing at 48%. Everything's going really well. SMCI, now I'm like, you know what? I'm just going to buy straight up. So I buy the straight up 600 call. And on that SPX trade that we had up here, that we traded for $6.20, and this thing went ham, but I was able to pull 64% out of it, got out at $10.20. And then SMCI straight up 600 call. I'm thinking I'm going to hold this thing for a while. And, now that I look back at it, let's just do it. This sometimes hurts your feelings, but let's look at SMCI. Where did it close and where did these close? February 2nd, 600 call. Let's look. I don't know if I want to look or not. SMCI. Maybe it's okay. Oh yeah, they closed under 600, so not a big deal. We took our money there, but that was after the fact. This did go up a lot more on SMCI. Moving on down, I just can't get enough of SMCI. This goes to show you, like, just be convicted and put a big position in and just leave it alone. I'm really trying better to be more like JC and like really get those really, really big amounts back. That would be awesome. But I take the 620 by 630. Hey, who knows? It might go to 700 this week. SPY, remember I did kind of like a strangle on SPY. So those calls that I had bought went all the way up to 105% or 255, and they actually went way higher than that. But either way, great trade. SPX Butterfly, I pay 50 cents for this particular one. Again, small trades. I expect zero. 48.95, 4900 by 4905. SPY, I go deep in the money, high deltas, just to make some money here towards the end of the day. It's 12:11 and I'm feeling bullish. So QQQ, it looks like Melissa gets in a put side, which I'd be curious to go over and again see where we were. So no matter what I would say, I'm not sure what she was using there, but what I would say is go over and look at the neutral strategy. A lot of times when our SPY and QQQ trades come in, I'm sure there was a reason why she put the put trade on. I think the reason why she put a put trade on was to hedge her long portfolio. All right. So um, that was her reason. I think I remember her saying that. And again, you can always ask Melissa about her trades. FDX, this is my last ad. So this last ad right here was to make my position $1,000. And that's exactly, it's just a tad bit over that. So it's a $1,000 position. That's what I'm willing to lose on FDX for this particular trade. And we still have 2 weeks left. Ulta, I end up taking a $3 loss on the equity that we showed earlier. And then over here, I am trying buy to, I know what would happen on this. So the last butterfly that you just saw, I felt like it was getting way too bullish and it was just going to be deep in the money instead of me pinning it. So I bought it out of the money just in case we decided to rip into the close. This was actually a really frustrating trade for me. Even though we do well and we actually pay for the trade itself, um, I made 200%, and this is exactly what happened. And I sent a note out in the room. Is towards the end of the day. So I have this position, all right, and please learn from my mistake here. I have this position, but this position is actually working out perfectly. And so I trim at 200%, okay? But on my monitor screen in Thinkorswim, I see that there is a sell in, and I'm thinking that it's the sell for this position. And so I keep trying to sell this and it's not working. And I realize it's because I'm trying to put a sell in here for $4 and something, right? And I don't realize until the end, like soon as the day ends. So this was up like 450%, which was really irritating. And I'm clicking on this, not realizing, and this is why it's important to separate your positions in your monitor tab so this doesn't happen to you. So I miss out on my 450%, um, which was just really, really frustrating. All right. Anyways, so we'll move on. SPY over here, this was the high deltas. I sell for 11%. Just to be safe, we get $11.22 for those contracts. And then SPX over here, the 49 by 25. This is the Iron Condor. So remember, I was going to get $21 a credit, but I only end up getting the difference between that. So it's still profitable nicely, 100 bucks, 100, 200 bucks per contract. SPY down here, I'm buying to open some calls for 71 cents. And this is the 1603. So that means the market had already closed and I'm feeling like, it's a little bullish. All right, and we'll talk about that one later. And SPX, I'm buying butterflies again, 20 by 30 by 40. It's $1.35. My SPY call, the 492s, which are these up here. I end up closing for 50%, and those end up going really, I think, deep in the money. This was just mismanaged. I should have stayed in the trade. Intel, it looks like I had a trade on here, maybe I'm trying to remember, this would have been a earnings trade as well, and I'm buying back the short side of that trade. Nvidia, same thing. I was buying back this trade as well. Actually, this was a loser, so I just got out of this. And same thing here. So I just got out of this as well. This was the short side though of Intel. This was just a straight up loser on put debits. This was a hedge. I remember that. QQQ. These were Melissa's trades. She decided with you guys to go ahead and do a challenge starting next week. So she wanted to clear out and take her profits out of her main account to reset at $5,000. I'm looking forward to that week. Her losses on that QQQ uh, hedge was, and it looks like she had two of these. So she ended up taking a loss there on her hedge of 94%. The market was just extremely bullish. And then she had TXN, which is, I think this is Texas Instruments. That did not work out. She takes 66% loss there. And then Tesla, those calls on the same day that I bought. Equity did not do well either. So she ends up taking a loss there. And then here we are on snow. These are lottos. So these are definitely lottos. And when I say lotto, still trying to use a strategy here. This was at the end of the day on Friday. I'm trying some verticals in the overall snow. Looked really powerful. Looked like it was going to hit my target of 220 plus. And as soon as I buy this thing, it goes down. So I lost my money on that. And then SPX, same thing. We didn't pin this, I don't believe. We might have made some money. Give me a second. We'll see here in a second. J&J, this was a bought back from a an earnings trade. So this is just me, getting out of a long call after we had bought back the short side. So J&J never bounced, but I believe we made money on the put side. And then Nvidia on this particular trade. Let's see, 665 by 670. Oh, so I'm trying another lotto towards the end of the day. You guys can see that it's 139 on a Friday. It does not work out. Nvidia, Same thing. Oh, okay. So this NVIDIA is part of the lotto, right? And I love doing this. One of my favorite things. So first of all, this is important. So let's go over this. NVIDIA trade costs 56 cents. Okay. And what happens is it goes down and the call I buy back the short side and I'm like, so the short side's gone. Now I'm long the calls and I'm looking for a bounce into the close. It never happened. So either way, I lose money on the trade. It didn't work out. SPX, you guys can see that we get our money back. We get 100% from the SPX trade and right up here, so that's 55 cents. So I'm paying for the trade. The trade's free. We get 100%. And then Microsoft. These are the calls when I first kind of started our alerts. We talked about the debit spread. So I bring back the dollar 20 something. And remember, the mismanaged side of this was not getting out of the butterfly puts for the earnings, which were like awesome. They were up 65%. I messed that up. But I did get some money from the trade coming back to me. So it was a overall loss, but not a bad one. And then Google, let's see, this was part of the old trade as well. I'm just buying back. So if you notice on these guys, so these don't expire until February 16th, but I was looking at, after earnings, after buying back the short side, I went ahead and kept the long side and I just was looking at the numbers. I'm like, these aren't going to work. Like I don't want to look at these every day anyways. Like what's the value of having a 6 cent option in there? So no, thank you. And then at the very end of the day, as I said earlier, I add into my IWM trade. So, what is my feedback from this week? And after our alerts, did we do well? I think we did pretty well when looking at the alerts themselves. Um, my biggest feedback would be what would I do differently coming into this week? And I have to say that, you know, again, rig is not my favorite trade. So I want to go over that one. Okay. And so we'll look at RIG, and I mean, it just looks like a freaking mess. It's like, you know how it is, guys. It's like you just woke up and you're like, what happened to me last night? Right? Like, why would I take this trade? Well, I know why I took the trade. It's because it was showing value over the trendy edge. And I added to the trade once it came down into the support area. And that didn't work. It just kept breaking down. And then when I really started to think about the trade, this is where I got frustrated with myself. I'm like, why am I trading a $6 stock or close to $6 when I took the trade? And honestly, I think what made me pumped up on this trade is the fact that, if you look at this channel over here, it looked like it was finally starting to show some kind of love. It starts to break out. Then it's a process. It gets over one of my trendy edges, and I'm looking to go long. So I was looking at this as a base and then looking for a further push into my targets up here, and then we'd be trimming. And I was thinking maybe, rig, oil, all that kind of stuff was going to work out. So this was by far, in my opinion, my worst trade this week. Okay. So RIG definitely goes down, as in John, what WTF. Okay. Now, looking at rig and understanding I still have 2 weeks left, the question is oil as well coming into a level that we could see a bounce? And I think, yes, it is coming close into a level. It's been down 3 consecutive days, typically 3 days down. You look for some consolidation and then up we go. Okay. Now the thing is let's just say we're making a higher low from here and we actually move up. We have resistance at 74.26. Oil, the on the daily, the cloud is collapsing. So if we get up and over this, we could see a pretty strong move up into 79. If we break down below this pivot low, I mean, obviously rig looks like crap now. Oil kind of looks like crap. But if we take out, sorry, this pivot low, then, oil is kind of doomed to possibly see 67. Okay. On a weekly standpoint, ugly candle. I mean, this is a engulfing bearish weekly candle. It makes me feel like it could be setting up to do like a hot dog where you get a candle like this. All right. And then the next week you get a candle like this, and it's just basically in a channel right there. The bigger move, obviously, is going to come from this green box if buyers show up. And bulls, if you're bullish on oil, you're going to have to get over this blue line, the trendy edge. So again, looking at rig, looking at the oil futures, I should have known that we were coming into the trendy edge right here, which is a very strong supply zone. And I should have waited until we could at least show some kind of value over that level before I mess with anything that's related to oil. All right, so that's my takeaway on this particular RIG slash oil futures. Okay. Other than that, good trades. I went positive on SPX this year, which I was really happy because, like, I was messing around with some butterflies early in the year and those weren't working out. And then I had some good trades this past week. And so overall, SPX is looking good. I had really good trades on NASDAQ futures that worked out very well. I had some great butterflies, great SPX, great ES future option trades that I took that worked out really well. Um, there was some good stuff. My biggest heartache was the fact that I was away from the screens. I wanted Meta 440 calls. I knew 100% I wanted them. I knew I was going to buy them. And instead of being in front of the screen, I was at my medical appointment on Thursday. I looked at a phone. I must have had the wrong option chain on, but I looked at the 440s and I saw $3.20. I don't know what the hell I was looking at. And I said, there's no way I'm buying them for 320. And then I verify at the close that they were at 78 cents. And it's kind of frustrating. That was a $500 trade that I would have been happy to buy. I did not plan on buying any puts. So it was like that one trade that I was convicted on. And then hearing people, if you would have kept the 440s at 70 cents, I mean, just to kind of give you an idea, and I understand it's in hindsight, but this was my problem. You know what I mean? Like I should have been here to take this trade. But the 440s, I mean, they went somewhere like a $500 trade could have easily those at one time I think were going like 25, $30 a piece, which is absolutely insane. Would have been the highlight of my 2024. So I in sentiment, overall sentiment, how I feel about last week, um, I feel I felt kind of discouraged, with my performance in some of the management, whether they're small positions or not. Uh, I just felt discouraged. I felt like my timing was off. I was discouraged that I thought, I read the market really well, and I felt perfect on Monday, and then on Tuesday I felt really good, and then it started to turn south from there and you could see the market only pull back for a couple days and then it just ripped face, man. And it was like I thought it was discouraging because I wasn't big enough in the positions that worked out, and it just and I wasn't there in front of the screen on that Thursday, and I was like, man, John, timing is the variable, man. You gotta like either lock in on the screens or just be okay with stuff. And I feel like my frustration with myself showed on my inability to see that the 440s were only 78 cents. I must have been looking at the wrong option date. And so, therefore, I missed out on a great opportunity. Overall, though, I just want to continue, obviously, always trading the process. I know that probabilities will play out. I look forward to trading with you guys. And I hope that this review helped. Please give me your feedback, and we'll see you guys soon.